Hi, this is Zak Mir from Master Investor with a look at some Bulletin Board hero stocks on Friday, the 10th of April. Starting off with Alba Mineral Resources, one of the horse hill mob, and here we see the gap through the 200-day moving average at 0.54 pence. Shares sort of peaked out over 1 pence during the day on Thursday. Expectation now is probably a retracement back towards 0.6 pence. Well, that sort of area. That was the support zone on the way down, 0.6, 0.7 pence in October, November. But as long as we hold above that, looking for a retest at 1.4 pence relatively easily over the next month or so. Obviously, the RSI at the moment is quite overbought at 87, and we'd expect a cooling off before new higher levels later this month and going into May. Doriemus, similar picture. In terms of the charting makeup here, we've got the gap through the 200-day moving average. That's a 0.11 pence. One would be going long over the shares at this time with a stop loss just below the gap, 0.09 pence, and looking for a top of September price channel target as high as 0.3 pence over the next couple of months. At this stage, only really back below that gap would be regarded as outright negative, and ideally there wouldn't be any fill of the gap or a sustained price action below that gap ahead of a move to the upside. Solar oil, sort of similar picture again, same sort of gap to the upside. The only difference here is that we've got the shares well above the 200-day moving average, and 50-day moving average is 0.55 pence. So one would be looking for 0.6 pence just at as the stop loss on the buy argument here, just below the latest gap, and target as high as 1.2 pence plus, which is the top of this rising September price channel. Stellar Resources, another one to look at in terms of this batch of shares. Similar to the last three stocks, really. Gap through the 200-day moving average, that's 0.58 pence. So any sort of dip towards that feature over the next few sessions regarded as a buying opportunity. The gap itself at 0.45 pence, so that's a stop loss on the buy argument, and we're looking for a top of September price channel target as high as 1.4 pence over the next couple of months. The main stock, which actually I looked at last week, courtesy of a request on Twitter, UK Oil and Gas, obviously lived up to the bill in terms of returning to the 1.8 area, resistance area of September, October. We sort of blasted that target out. The question now really is how much more, or what's going to happen next. RSI 95 is ultra overbought. One would expect probably a dip towards the 2 pence area. That was, let's say, the resistance area previously, and anything back towards that area, one would be sort of keen to buy that dip onto, and that would also cool off the RSI. This stage really only back below 1.8 pence. Let's say the old resistance itself would be regarded as outright negative. Target as high as 5 pence still, which is obviously nearly touched yesterday. The high was 4.74 pence, but 5 pence, a retest of that area, probably achievable. And of course, there may be the surprise that the shares don't actually go retrace in any material sense ahead of hitting that zone. But 5 pence at the moment looks like the top of the range. That's it from me. More updates at masterinvestor.co.uk.